You're listening to the Accenture Insurance Influencers Podcast.
Hello, I'm your host, Igrani Yu, and today I'm speaking with Ryan Stein.
My name is Ryan Stein. I'm the Executive Director of Auto Insurance Policy and Innovation at Insurance Bureau of Canada.
Ryan, welcome.
Thanks for having me.
So tell me a little bit about Insurance Bureau of Canada, or IBC. What is its role within the insurance industry in Canada?
IBC is the National Trade Association for Canada's property and casualty insurance companies. And what we do is try to work with our members to examine the political and regulatory environment and see if there are ways of improving it for the benefit of insurance customers across the country.
I'm looking forward to asking you about autonomous vehicles and what that means for the insurance industry. I wanted to start with background because I feel like we almost need a vocabulary lesson before we get into it and what people mean when they talk about autonomous vehicles. So I understand that there are actually 5 designated levels. Could you fill in our listeners for those who aren't familiar with them already?
Yeah, no problem. So the 5 levels of vehicle autonomy, you can actually say that there's 6 because there's level 0. They come from the Society of Automotive Engineers. So level 0 is obviously, no automation. The driver's in complete control of the vehicle at all times. Level 1 has some driver assistance, and many people are used to driving those kind of vehicles. It might have cruise control in there, for example. Level 2. Vehicle that can take control of both the vehicle speed and lane position in the same situations, for instance, on a highway. Level 3, it's limited self-driving, so the vehicle can be in full control in some situations. It can monitor the road and traffic and can also inform the driver when he or she will have to take control of the vehicle. Level 4 is fully self-driving under certain conditions. So as long as you're within those conditions, it could be a certain area, it could be certain weather conditions, it could be, certain roads. The vehicle can handle all the driving functions. And then level 5 is full self-driving. The vehicle can do pretty much everything without the human needing to take control.
Right. And I know that there's a paper that recently was published by IBC on what you refer to as automated vehicles. I've also heard the industry refer to autonomous vehicles. Are these essentially the same thing, different terms for the same thing?
Yes and no. I mean, autonomous pretty much means it drives itself. I like to use the word automated because you could be talking about vehicles that can perform certain functions themselves and then, still require humans to play some control in the driving operation. So they have automated functions, but they might not be fully autonomous. That's why I like to use the word automated.
Okay. That brings us to the insurance industry and some of the maybe assumptions that are present within the insurance industry that automated vehicles may not fit. So what are some of those underlying assumptions that we've built into our current models of auto insurance?
At IBC, we're really focused on the public policy environment, so the legislative and regulatory environment that insurers operate in, and which really sets the parameters for the type of products or coverage or auto insurance policies that they can sell to customers. And so the main assumption that I'll mention now, and that we really deal with in the paper, is that the provincial insurance laws that underpin the auto insurance policies that we all buy is that human error is the primary cause of collisions. So the tort laws, liability laws, the liability coverage that people buy is all based on this notion that humans cause collisions. And that's because right now, humans are responsible for over 90% of collisions. So it makes sense that the auto insurance laws and the coverage that comes from that will all be based on humans causing collisions.
So some of those assumptions about auto insurance have been in place for a while, and recent innovations have challenged them. So for example, the move to the sharing economy and ride sharing and car sharing. Can you talk a bit about how that was a challenge to the personal auto industry?
There's a lot of parallels you can draw from that experience. So the insurance laws are they're written in a very specific way. And, the way they were written is that people owned a vehicle, and that vehicle was predominantly used for personal or commercial purposes. And the owner of that vehicle was the one who bought the coverage. So each vehicle pretty much had one policy on it. and that policy would either be a personal or commercial one, although you could buy optional products if you were using your vehicle for commercial purposes. So really, the laws really said one vehicle, one owner, one insurance policy. And then the sharing economy comes, ride sharing services come, and then all of a sudden it started blurring the lines between personal and commercial. When people were using their vehicle for ride sharing purposes, and when and ride sharing companies that were enabling this, they wanted those vehicles to be insured for when the ride sharing app is on to when the ride sharing app is off. But that's not covered under the existing personal insurance policies. So how do you make sure that people that are using their vehicles for ride sharing can get coverage? Well, people that signed up for ride sharing services didn't really want to go out and buy a separate policy, or maybe their insurance company that sold their personal policy didn't offer this ride sharing policy. But the ride sharing companies wanted to provide them with insurance for when the app is on to when the app is off. And so, to be able to offer a second policy to those vehicles that covers the ride sharing, and for that policy to be provided by a different entity, this time the ride sharing company, not the individual vehicle owner, you needed legislative and regulatory changes to make so that insurance companies can sell the type of ride sharing policies that the ride sharing operators and the vehicle owners wanted to buy. And then you also needed now, because you were going to have two policies on vehicle, one would be personal, one would be for ride sharing, and they might be provided by different insurance companies, you needed rules to or processes to manage claims so that it would be easy to figure out if a collision happened with one of those vehicles, which insurance company pays, is the app on or is the app off? And once identifying that, moving forward with the claims process, and anyone that was injured or needs to repair their car can move on more quickly. So it was just another example of the insurance laws needing to be updated to accommodate a different type of vehicle use and a different type of business model.
Right. And it strikes me that there are a lot of similarities to what we're looking at now with automated vehicles potentially being on the roads, where a lot of the conversation has been about how it is a shift from a personal auto policy to one of product liability. So if there is an accident, and it is a car that can drive itself, was it the driver or was it the manufacturer? Can you talk a little bit more about some of the other implications for insurance?
Yeah, so right now the responsibilities for collisions is heavily on the human. I mean, they're responsible for more than 90% of collisions, and all the auto insurance laws and the coverage is all based on that. So right now, if there's a collision, people go to their own insurance company, they get certain benefits, and if they need more and they weren't responsible for the collision, they have an opportunity to pursue a liability claim or sue the person responsible. But in a world where it wasn't the person that caused the collision, it was the technology, well, then you're sort of outside auto insurance litigation, and you're now looking at product liability litigation. And product liability litigation, that would be against a vehicle manufacturer, the technology provider, is a lot more complex and takes a lot longer than your typical motor vehicle collision liability claims, where there's tens of thousands of them a year. And you kind of, figure out, okay, what the cause was, who was at fault. Okay, here's how much gets paid for the claim. Product liability litigation is more complex and takes a lot longer. And then what that means is if you have people that are injured in a collision that was caused by an automated vehicle, like I said, they'll get some coverage from their own insurer. But if they need more, they're now going to have to go up against a vehicle manufacturer, technology provider. It's no longer a motor vehicle liability claim, which means that person could now be waiting a lot longer to get compensated. And from a public policy perspective, auto insurance is heavily regulated, and we believe that the laws that underpin it should be about making sure that people who are injured have access to fair and quick compensation. And so we see automated vehicles sort of challenging the auto insurance laws that have been in place for decades, and we think that there's a need to update them to reflect the risks associated with automated vehicles, so you don't have people injured having to proceed through costly and protracted product liability litigation.
That's a great point, Ryan. Thanks for making the time to speak with me today, and I look forward to continuing our conversation in the next episode.
It was my pleasure.
That was part one of my conversation with Ryan Stein from Insurance Bureau of Canada. Join me next time when we look at the two components of IBC's recommendations for updating auto insurance policies for automated vehicles. We'll also look at the opportunities and challenges that are created as autonomous vehicles become more prevalent. Thanks for listening.
You've been listening to the Accenture Insurance Influencers podcast with your host, Igrani Yu. To subscribe and find more episodes, visit accenture.com/insuраnceinfluencers.